So you're planning for retirement in Georgia? That's fantastic. But it's about a lot more than just saving money. Today, we're going to dive into a really critical piece of the puzzle that often gets missed: how to protect your hard-earned money from the high cost of long-term care.
We spend a lifetime building our savings, right? Carefully crafting that nest egg for the future. But what if I told you a single, pretty common life event could threaten to undo all that hard work? Let's talk about that hidden threat to your retirement.
So you really have to ask yourself, after all this careful planning, is there a blind spot? Something that could put everything you've worked for at risk? For a lot of folks here in Georgia, that blind spot is very, very real, and it has everything to do with needing care later in life.
And that threat, it's the absolutely staggering cost of long-term care. It's a reality that most of us will face in some way, shape, or form. Yet it's something that often gets pushed to the side in financial planning. And believe me, the consequences for a family's savings can be devastating.
Okay, get ready for this number. For 2025, the average cost of long-term care, right here in Georgia, is projected to be over $70,000 a year. Let that sink in. An expense that big can drain even a really healthy retirement account in just a handful of years.
So, what happens if you're facing a bill that large without a plan? Well, you could be forced to spend down your entire life savings just to get help from Medicaid. This doesn't just put a huge strain on your family's finances, it can also lead to the state coming after your estate, including your home, to get its money back. And what's really crucial here is that it can take away your choices, maybe forcing you into a facility when all you really wanted was to get care in your own home.
Okay, so that's the scary part. But what can we actually do about it? The good news is there are ways to prepare. One of the big ones is long-term care insurance. But listen, it's not the right move for everybody. Let's take a practical look at who this kind of planning really makes sense for.
All right, think of this slide as a quick cheat sheet to help you figure out if this is something you should even be thinking about. Over on the left, if you've got significant assets you want to protect and you really value your independence, then yeah, this could be an incredibly valuable tool. But on the other hand, if you're on the right side, maybe you have very few assets, or you have a high enough net worth that you can comfortably pay for care out of pocket, well, then it might not be necessary for you.
So if you were looking at that left column and thinking, hey, that sounds like me, you're probably wondering, okay, but how does this stuff actually work? Let's pull back the curtain and see how it all comes together. Think about it like this. You insure your home, you insure your car, right? Against things you hope never happen. Long-term care insurance is kind of the same idea, but it's designed to protect your financial independence. It's basically a pool of money set aside specifically for care services, whether that's at home or in a facility. That way, you're not forced to drain your own savings to cover those huge costs.
And look, this is definitely not a one-size-fits-all kind of deal. There are all sorts of options out there, from the more traditional plans to these really interesting hybrid policies that combine life insurance with long-term care benefits. All this variety means you can actually find a plan that's customized to what you actually need and what fits your financial goals.
You can probably see how this can get complicated pretty fast, right? Trying to sort through all these different options on your own, it can be overwhelming. That is why having someone in your corner, a real advocate you can trust, is so key to finding a strategy that really fits you perfectly.
And when you're looking for that kind of help, this right here, this is the most important principle to look for. You want an advisor whose loyalty is to you, not to a single insurance company. That's the only way you can be sure they're really looking at the entire market to find the best solution for your unique situation.
This slide really highlights a crucial difference you need to understand. A captive agent works for one single company, so they can only sell you that company's products. It really limits your options. But an independent broker? They work with a whole bunch of different companies. That means they can make the companies compete for your business, which helps you find great coverage at a really competitive price.
At the end of the day, this whole conversation is about so much more than just protecting your money. It's about protecting your family from that financial hardship and emotional stress. It's really about giving peace of mind to everyone you care about.
So, what's the big takeaway here? What's the one thing you should remember? Just understanding that these long-term care costs are out there is the first, most important step toward a truly secure retirement. And whether you handle it with insurance or self-funding or some other strategy, having a proactive plan is, without a doubt, your absolute best defense. To learn more, think about talking with a qualified, independent financial advisor who can help you explore what the right options are for your future.